So this is part number 18 of this multi-part video series. I can't believe we have reached part number 18. I can't believe that I've made 18 videos on positional stock trading. You can understand why I like positional stock trades. Okay, because we are trying to put all the odds in our favor as much as we can. Now, in this video, I want to give you a shortcut to shortlisting stocks. So remember, we had looked at filtering, then shortlisting, then stock selection, position sizing, trade execution, risk management, trade management. Just remember that process in your mind. It's a very, very simple process. This is no rocket science. Okay. That step number two, shortlisting, we do that on the list of stocks which we have after the filtering process. Okay. So before I explain to you this slide, let me take you to the shortlist, sorry, the filter. So let's say this is our filter. So I apply this and you see there are 44 stocks. So this is step one is done. Okay. This is 44 stocks out of 5,000 odd stocks in India. So filtering is done. Step one is done. Step two is shortlisting, where you click here and you open windows on the right side. Now I can't do that for you because of regulations. I cannot show you latest stock price data. I cannot discuss that. But what I do is I click on each one of these and open multiple. I open 44 windows here, and each has a weekly chart on MarketSmith. Now on the weekly chart, on the top right corner, you will see something like this. And I will explain what this is. Okay. So when you open this, out of 44, we want a short list of, let's say, 4 or 5 stocks, right? And then those 4 or 5 stocks will go into uh, stock selection process. Okay. So for shortlisting, I will give you a shortcut. Okay. So let's open this. Yeah. So when you open the weekly chart of any stock, on the top right corner, you will see something like this. Okay, so let's try to understand what this is. It says minus 6% from pivot in 5 weeks. So, which means the stock has probably touched the pivot inside the base. And after touching the pivot or trading near that zone, it started to fall. And now, after 5 weeks, it is trading minus 6% below the pivot point. That's what this means. 20% from pivot in 98 weeks. So from the pivot, when this stock broke out of that base, it has taken 98 weeks for that stock to go up 20%. 98 weeks is like 2 years, correct? More than, sorry, yeah, 2 years approximately. So you can see it took 2 years for the stock to go up 20% from the pivot point. And then this is 9% to pivot, means the stock is coming near the pivot, which means the stock will enter the blue shaded area. So as you can see, this is red color, as a pink color, this is blue color, and this is black color. So one shortcut I will give you is, whenever you open those 44 charts, wherever you see red color and blue color, okay, pink and blue color, just reject the stock, because red means the stock has touched the pivot and started falling down. Blue means the stock has broken out already. Okay. We don't want the stock which is falling down. We don't want the stock which is extended. We only want stock which is closing in, which is going towards the pivot. So this is a very quick method that I am giving you without even looking at the chart. Okay. Without even looking at the name of the stock. As long as you see black color, those are your shortlist. Okay. Now, this is very simple. See, out of 44, roughly like 35 stocks will either have red or blue. Out of 44, 35 will have red or blue, or more. Sometimes 40 will have red or blue. Okay. Reject the stocks. Okay. Now, sometimes what happens is the price is this is blue color, okay? Red color we anyways don't pay any attention because the stock has probably touched and started falling below the pivot. So below the pivot, you don't have the blue shaded area. So red you can forget. But sometimes what happens is here it says 1% above the pivot or 2% above the pivot. As long as it is within 5% from the pivot point, we still have a chance to buy the stock. Okay. So what you have to do is open those 44 charts, weekly charts. Wherever there is black, just shortlist that because that is our shortlisted stocks. Wherever there is red or blue, just reject them. Now in blue, just make sure if this is number is less than 5%, take note of that stock, okay? Because that's probably trading in that blue shaded area. So remember, red is like complete reject, black is like complete shortlisting. We need that. It doesn't matter, this number could be 17%, 18%, 10%, 2%, it could be anything, okay? But blacks are what we want, okay? Then this number, the blue, reject all of them except the ones where the distance is 5% or less than 5%. So the stock is probably trading inside that blue shaded area. So I have given you a shortcut now, okay, for shortlisting. So out of 44, if there are only four stocks with black color, those four stocks are your shortlist. They will go into the stock selection process like liquidity, comparative, technical, fundamental, market, all of that. Only those four stocks for the next day, not for the next week. Now, what is this? OH means off the high, OL means off the low. So this stock is trading 15% below the 52-week high. Okay. And it is also trading 6% below the pivot. So which means the distance between, so you have the 52-week high, then you have the pivot, which is 9% below the 52-week high, and then another 6%, which is price is 6% below the pivot. So 52-week high, pivot, and the price. So probably the distance between high and the pivot is 9%. So 9 plus 6, that's 15% below. And even though the stock is trading 6% below the pivot, it is still trading 52% above the 52-week low. Okay, so its stock has gone up significantly. Here, although the stock has gone up 20% above the pivot, it is still trading minus 7%. It's still trading 7% below the high. So which means the stock has gone up not 20% from the pivot. It has gone up 27% from the pivot. And from that point, it had started to fell another 7%. And from that high, it is trading 7% below the high. Okay. And 25% above the 52-week low. See, the stock is 20% above the pivot and 25% above the low, which means the distance between 52-week low and pivot point is probably 5% roughly. So the 52-week low was very close to the pivot, which means probably it was a flat base or something like that. I don't know. I'm just guessing by looking at these numbers. But see, when shortlisting, you have to keep your process simple. Just shortlist based on color. So red means reject, black means select, and blue means reject. But if this number is 5% or less, we could consider that. Okay. And here, see, off the low is 8.56%. That is understandable because it's 9% to pivot, right? So the stock has to go up 9% to reach the pivot, which means the high and the pivot point is almost the same. So if the stock is down from the high by 8 to 9%, and the stock has to go 9% above to reach the pivot, that means the high and the pivot is the one and the same. Okay. And it is 40% above the 52-week low. So remember this shortlisting criteria. I have given you a shortcut, okay, because I want to simplify your shortlisting process. Okay. So every time you open a weekly chart, just look at the top right corner. That's it. Don't even look at the chart for shortlisting. Okay. Thank you so much. I will see you in part number 19.